What's up guys, welcome back to my channel. My name is David Hanlon, aka the Laptop Legend, and I'm making this video this morning because yesterday I took the single biggest day trading loss of my career that was entirely my fault. So I do want to clarify on that. I did have a one-day loss, technically realized of like negative 50 something thousand because I cut a bunch of swing bags, but I was only down like 2,000 or 3,000 day trading that day, so I'm not going to count that day. And then I also had my $17,000 loss on CCIV back last February, and that was when my overall accounts were only like, I don't even know, like 80,000 or something like that. But again, they locked me out of the system. I could not sell for like 5 hours, 6 hours of market time. So because I don't really count that one as like my fault entirely. Yes, I did have a part that I played in it, but I tried to sell. I tried to cut that loss when it was only like, 5 or 6,000. So this was the worst loss that I have ever taken. That is 100% my fault, and I really want to talk about how it happened, what led to this happening, and what I'm going to do in the future to prevent another ridiculous loss like this. To put it in context, I was up about $1,200 by like 2:30 p.m. and by the end of the day, I was down $10,500. And typically, this is not something that would happen to me because I am extremely disciplined about cutting my losses before they get to anything that's anywhere close to that. But the issue comes in where you cut your loss, but then you get right back in with the same trade thesis, 30 seconds, a minute later, thinking that, oh, now it's gonna do what I thought before. And if you do that, 10 times in a row with very big size, there's really no difference between just holding and being stubborn the entire time through the whole move. So, I've done a lot of research last night around what good traders do when they have an issue like this, and I think I've got some good solutions, and hopefully, this lesson will be helpful for you guys. I know some of the guys in the Discord struggled as well. It was just a very tricky day overall if you didn't manage your biases correctly, and I'm gonna dive into the chart so you guys can see what I'm talking about right now. So this is the chart for BABA. And basically, you can see this stock has been extremely beaten down over the last, year, whatever. And even just recently, it lost almost 50% of its value, pretty close. What, like 40-some% in the last month, literally in the last month. So it had just a crazy sell-off, and we had a bottoming day here. But the issue came in when we woke up yesterday morning, and I just saw this absolutely massive gap up. It closed, you can see here, at $77 a share. And it opened at $92 a share. So already in my head, I'm thinking, all right, this thing's really sold off. It's got a massive gap up. And a lot of times what we see on these massive gap ups is they move so much in the gap, but then there's no like continued buying pressure because it just gaps so much that everyone who dip bought the day before is just taking their profits on that huge gap up. Because think about it, if you dip bought on this day here and you wake up to what is that, like 13, I can't even do that math, $15, $16 a share in profit? Like, who wouldn't take that, man? I would take that. I know I would take that. So ultimately, that's where the issue began to start because my bias was kind of wrong from the beginning. Now, I know that there's a thing called gap and grind where basically they have a big gap and instead of fading off, they basically just grind higher the entire day. And what the reason for this is, I'm not exactly sure. Maybe there's shorts like me who assume that stuff has to drop. And so, it's just shorting, and then they cover into the next shorts who then cover the next shorts. And it's kind of a, I guess, like a snowball effect. But, this was pretty much every single Chinese stock. If you look at TCEHY, same exact thing, that massive gap up and just grind all day long. If you look at LKNCY, this thing was more beaten down recently, but, massive gap up and closed right at those highs. So if you had a short bias on this thing at all and were unwilling to switch your bias, you just got absolutely eaten alive in the last hour and a half of the day. And I want to show you the intraday chart just so you guys can see a little bit better. Let's go 5 days. 5 days, 1 minute. Just so you can see on BABA. Again, so this thing was super beaten down. Had a big rip, but it just got smothered. Closed okay, I guess. It did technically close green. But then look at that massive gap up. So, when we get this big wash out of the open, you're assuming, all right, people are locking in profits. This thing is, even if it bounces, it's probably just going to fade and come back down. But it never did. It never, ever did. And there was a really important support level at 96.50s here. And that's where I started going wrong. It broke under that level, I guess like a tiny bit on one of these. It went to like 96.40s, and I took a short, man. I kind of anticipating the breakdown instead of waiting for it to break, come back and test and fail, because that doesn't always happen. It doesn't always retest, but I guess that's what happens when you get ahead of yourself, man. And it held this support beautifully, and then this last time it just went straight up and ripped. And what's most unfortunate about this is, I believe, on this one, bro, I mean, I actually longed right here. I was shorting a ton on a couple of the OTC stocks. I was shorting some Tencent, I was shorting some LK, I was shorting some BABA too. But there's really not any difference between listed and OTCs with bad fills, right? So I just want to talk about that concept. So for me, OTCs move slower, and if you're taking like small size on an OTC, you can typically get out, before there's a huge change in the price. But liquidity becomes a big issue when you're taking, 6 figures plus, multi-6-figure positions in these OTC stocks, because you literally cannot fill what you want to fill before the stock moves, 20 cents plus against you. So I always felt safer on OTCs taking bigger size, because I'm like, oh, well, I can read the level 2 and I can get out before it goes really far against me. But there's no difference between if you buy on BABA, or I guess say you short on BABA and it has instant fill, so maybe someone buys and it immediately rips against you, versus you short Tencent or you short LK and CY, and then you see that it's going to go, you try to cover, but you can't get filled for 20 cents. There's really no difference. On BABA it happens instantly. On Tencent, LK and CY, it happens slowly, and you feel like you're more in control, but you're really not, because you can't get out. So my issue was, I kept smacking. If you look at this chart, man, I kept smacking short, assuming that, all right, this is where it's going to fail, this is where it's going to fail. It doesn't, it rips back up, so I cover. But then I don't want to miss the downside, because I already had taken some losses. So I'm like, all right, I'm going to short again, and then it rips back up. But you always think like the next time is going to be the last, it's going to be the top. And that's that's a dangerous assumption. And honestly, if I had switched my bias sooner, I probably could have had a good green day. Honestly, I could have saved myself. Let me show you the intraday chart on Tencent here, just so you can see that. Also massive gap up. But you can see in this rip, man, I mean, it was pretty wild. So, it ended up dipping below. Also, I guess another factor that I forgot to mention is the fact that, it was the Fed meeting yesterday, and that just throws a whole nother variable into the equation, where stuff can make big moves that if you get on the wrong side of them, you can just get absolutely wrecked. So you can see, big rip here. You think it has to come down. I actually was short here. It was up like $800. But I could not fill here, man, and it ripped back through to the highs. Same type of thing. You think, all right, well, this has to be the top. You size in short, and you want to be a little bit more patient, and then you end up, filling up here on your covers, because it's just so bad. And that's when there's a red candle, so you assume, all right, that's it. So then you short there, ripped right back to new highs. Same thing, and it just goes on and on and on until finally I decided to start longing. Like right here in this area. And I made, a little bit back, but I sold too soon, and then, you flip your bias again too soon and start shorting. And then finally towards the end here, that's where I was like, all right, I'm just going to long this thing. And, that's of course where it doesn't bounce, because there's not enough time left in the day. So, it's about recognizing strength in these trends and not being stubborn. And I think moving forward, what I'm going to do is if I ever take, I think, I'm still trying to figure out the exact number. I'm leaning towards like $500. But if I'm trading the same stock on the same side, so like either consistently shorting, or buying, because this happens to me on dip buys too, where stuff is like choppy and isn't bouncing. If I ever have 3 trades in a row where I lose more than $500 on the same side, I need to either switch my bias or just stop trading it altogether. And that would have completely prevented this loss, because again, I realized 1,000 loss, 2,000 loss, 1,000 loss, 2,000. Like, it wasn't just one big 10, 11, 12K loss to go from 1,200 positive to 10,500 negative. So that's my biggest takeaway, I think, is just, putting some systems in place to prevent myself from being super stubborn on one side. Because that actually happened a couple of days ago on LK and CY on like one of these days. I think it might have been this day. or it might have been this day where it just would not bounce. And I kept trying to dip buy, and I kept losing money trying to dip buy. And if I just flipped my bias and shorted into every pop, I would have been positive. So I think that's the biggest thing. Just make sure your bias is on the correct side, and also understand that when the Fed is talking, there can be other variables, and also understand that gap and grinds are a thing. I heard some really good traders talking about how they've lost a lot of money on these setups before in the past. They've paid their dues, and that's how they knew not to be aggressive when this thing was making what you would assume to be like a ridiculous move that it shouldn't be making. And it's really easy with that bias in your mind to be fighting it the whole time. So I think that's pretty much the takeaway, man. I mean, honestly, it's not a horrible loss. I'm still green on the week because I had some good days on LK and CY before. But it is frustrating, and it's definitely annoying. But this is an issue that I've had for a while, where I get really stubborn fighting a trend. So I think it's a good wake up call, and I think hopefully that rule that I'm putting in place, if I take those 3 losses, that would be $1,500, or assume even they're $1,000 loss. That's $3,000. That's still a manageable loss for me versus $10K pluses. That's getting a little ridiculous. Just for being stubborn when I easily could have stopped at any point and flipped my bias and made all that money back and more. So I think that's my biggest takeaway. Hopefully you guys found this video helpful, and hopefully you didn't get completely destroyed by this. But if you did, it's a good opportunity to learn, a good opportunity to develop as a trader. So that's it, guys. I'll see you in the next one. Market's going to open soon, so I got to hop off and hop on the Discord. But I will see you guys in the next video. Until then, you know the drill. Let's grow better together. Bebé, dime por qué te mientes. No puedes esconder todo lo que tú por mí sientes.